If we go ahead and shift over to the US dollar index, let's go ahead and pull that up for you. And this is what we have been looking at here, is this really bearish setup here in the US dollar with this really weak rising phase. Now keep in mind, right here is where we had both a weekly low as well as a monthly low. So the highest odds would be that you'd see a multi-month rally. But what happened is you had a very weak rally here that only lasted 1, 2, 3, 4, 5 weeks. And we've only seen lower highs form since that point and are now moving through this key line in the sand at 182. That says that now the monthly cycle has turned on the downside with the weekly cycle. So some of the evidence here is really quite bearish in the US dollar index. Highest odds would be that we would form now a late low on this minor cycle as we see the dominant energies push now on the downside. Frequently that would show up on shorter time frames as late lows. That's why we are drawing this as such, and then still yet lower here after that, as keep in mind this next low in the US dollar is only due in January of next year. So that's a lot of time here in what is now a left-hand translation on the dominant cycle in the US dollar. Shift over to the daily. Now this is a huge warning here. There was a low that was due 620 to 76. We had this rally that then ended. We then broke the low at 102.38, and it said that this is now a left-hand translation here in the US dollar as long as we hold a bearish slim ribbon. That is really very important. When you see a good left-hand translation, you'll see a bearish ribbon throughout, and that is really what is a key tell here in terms of how weak this underlying will be, is if we can hold a bearish ribbon. Now on the downside, we have already moved through this old low, as I mentioned, at 182. So we're going to go ahead and draw in a fib here from that high to this low right there to the most recent highs right there. And you can see our levels on the downside. We have a 127.2 at 100 and a 161.8 at 99.07. So those are our two levels on the downside. We have a minor cycle low that's due around 724. So the shape of this move is again as follows: lower highs, lower lows, until that next dominant low forms, and that low is only due in and around the early part of September. So that leaves a lot of time left here for overall a bear bias to stay in play here in the US dollar, and that would really be bullish for the euro versus the USD, and also bullish for the metals.